There are so many factors weighing on the gold price right now. The US dollar, geopolitical events, what is happening with Russia and Ukraine, what is Saudi Arabia up to? Why did they join the Shanghai Cooperation Organization? Lots of things weighing on the gold price. And we have Frank Holmes joining us. He's the CEO and CIO of US Global Investors and great experts in the field. So I'm really looking forward to this conversation. Frank, it's great to have you on. It's good to see you again.
It's good to see you again also.
Yeah, it'll be busy. It'll be a busy conversation here because we just chatted for like 15 minutes before hitting the record button, and there's lots to go through here. Lots of factors, lots of things happening in the world right now. But to start us off, Frank, give us a bit of an overview of like how worried are you about the economy right now, and what's the state of the economy right now?
Well, I like to look at macro and then go micro for stock picking. But both of these disciplines of macro to micro require for me a quantamental approach. And now it's a whole idea that a fundamental analyst applying quantitative math is a quantamentalist. So that's my new religion now. But when I look at that and I look at data points, if I go back to the 40s, before I was born, and I was born in 55. So going back in the 40s up to today, on the the third year of a presidential election cycle, and we are in the third year, and you have a Democratic president, the odds are 90 some odd percent the market will be up 13%. Isn't that amazing? So it may start off like a lion and it's going to end like a lamb, or it's going to come in like a lamb and end like a lion, like they say for the month of March. And historically, gold is down in March, but gold is up this year. I'm going to go with the quantamental approach on macro data points and say, I think the stock market has a high probability of being up this year, and we see that the beginning. And I think that the price of gold will be higher, and I think gold stocks will rip.
That is very, very interesting because I'm a bit surprised. I'm looking at the fundamentals, right? I'm looking at the gold price right now at 1970 at the day of recording, and I see the S&P trading around 4,000 as well. It's all holding in there. It seems like the investors believe that everything will go back to normal and we're not going to be running into a crash. Like even recession fears seem to be on the back burner. It seems like the date for a recession seems to be pushed back every morning. I would turn on Bloomberg, right? Like where do you see that strength coming from? Like where's the confidence coming from, Frank?
Well, I think the rates have peaked or are peaking, and I think there's several reasons. The most recent in the month of March was the run on money, and that had to do with portfolio management. When you run a bond portfolio and you're in a bank or you're a money manager like US Global is, you have two ways to run a bond fund. They call it laddering. So if you had $100 million, you're going to invest it in a 10-year or an average maturity up to 10 years, so you put 10 million each year, and that's how you would roll it over. So that's laddering. If you barbell it, you would have $5 million way out in the 10th year and $5 million in shorter period. But when you do that, you really have to be a great trader. You have to have disciplines and tools. And well, what is showed here is a lot of these young portfolio managers at these banks had a big mismatch. So they were barbelling to get a higher yield. They had more money in long-term government bonds, and all of a sudden rates start to rise. And well, they'll fall next week or they'll fall next quarter. They didn't. And so they all got offside, and the paper losses are just humongous. We're talking about hundreds of billions of dollars. So that is a mismanagement of the banks. And then two, you have technology in the great digital transformation. We were talking earlier about all these apps we have, and on your iPhone, it just doesn't end. Many more apps there than BlackBerry, something that where BlackBerry became extinct, they didn't stay as fast as the development of apps. Well, banking apps and the ability to digitally move money so easily and quickly, all those controls of that system, you don't have to wait in line, and so any type of fear, then people move their money. So that makes it much faster and easier for a run on a bank. But what we did see in this past 12 months is the surging rates when they hit the cloud ceiling of 4%. And as soon as that jet started going above 4%, flying up. We got turbulence, and people said, guess what? I'm out of here. I'm going to earn 10 basis points on my checking account. I'm going over to a money market fund where I'm going to get 4.5%. And they do it with their app. So it happens so quickly. So what they have found is that, as we know, that ice always melts at 1 degrees in Celsius or 33 degrees in Fahrenheit. And it just takes that 1 degree difference and the ice starts to melt. Well, now we're talking about 4% coupon and that psychology is so important. But as a gold investor, and if you know that the CPI number has been changed many times since 1980, when Paul Volcker came in, and only recently the CPI number was changed again, if you use the 1980 algorithm, inflation is really 14%. It's not 6%. It's not 7%, it's 14. And so we have to turn around and think, if you're a gold investor, whenever there's negative real interest rates, gold becomes an attractive asset class. And we start to see this sort of turbulence of rates bumping up back in the fall around September, October. And I know our GOAU ETF listed on New York Stock Exchange, it started to take off. And it surged 40 some odd percent. So money was starting to go into gold then, before the banking calamity, which happened about 6 months later. And I think that run on the money only accelerated, but I think it was already starting with rising rates. So if rates have peaked because of so much turbulence in the banking financial sector, then that means that the market will be higher mathematically, just because you can get dividends that are very attractive. And you're going to see gold prices, and people are going to start realizing we have negative real interest rates. Even inflation comes down. I mean, do you think inflation is going to come down to 4%? We still, I don't think so, but that will put pressure on rates falling. So I think that this is sort of the positive element for gold investors, because gold investors are very smart in looking at the history of any form of destruction of fiat money. And fiat money always gets destroyed when there's big imbalances in a government's monetary and fiscal policies. And for your listeners, it's a binomial model, like 0 and 1s for the internet. Monetary policy, fiscal policy, imbalance. Monetary policy bifurcates again. It's real interest rates, which are important to gold trade, and it's the money supply. Well, money supply has come way down the past year in the US, but now it's starting to turn up. Rates cannot go above much higher than they are without a financial meltdown. So we're going to be living with these negative real interest rates. This is the perfect scene for gold investors to increase their exposure to these assets. Fiscal policy is tax and spend and regulations. So what are we seeing is this incredible amount of regulations in the US in particular. You're seeing lots of financial regulations, you're seeing environmental regulations, and you're seeing policy, climate change policy. These policies are in imbalance to where the tax collection is. So that means that gold, there'll be destruction of the fiat currency internally. Like, forget the external forces. Now we got a big layer, because that's the micro domestic issue for US economy. We have China. And this is the first time America's had to fight 2 Cold Wars at the same time. And that makes it a potential black swan. And the difference before, when it was just Russia, Russia's GDP was never close to America. Yes, they had a lot of nuclear weapons, but if you went and visited, and I've been to many of their military bases starting in the early 90s, they're a disaster. They're filthy. They're like, there's no way they are what America has built. And in Canada, also, the military bases are pristine. They're like going into a hospital. Not in Russia. So you sit back and you say, okay, how big is their economy, and compare? Well, back then, the economy of China wasn't $1 trillion. And now China is pushing 19 trillion this year. America is going to push 24 trillion. That gap has closed a lot. And China sees that. And if you look at average GDP per person, because they have 1.4 billion people, Canada is similar to the US. It's like $70,000 a person. And when you look at China and Russia, they're around 12,000 a person. So you say, okay, now what does that mean? China says, well, we still have more than 300 million people making 100 grand. Well, that's bigger than all of Canada by tenfold, basically. So they do have an economic force, and we know this for our JETS ETF, because the airlines industry has all of a sudden had another big run because China opened up. And China was dominating travel around the world outside of America, because there's a certain income level that people go and become big tourists. So with that, and when I look at China's GDP, that force, and remember physics, the laws of physics are really important, force equals MA, the mass times the acceleration. So the mass could be the population, who's got a much bigger population, or who has a much bigger army, or who has a much bigger GDP. So if China's GDP is this big and it starts to accelerate with 1.4 billion people, it's a powerful force on a global scene. And so now they want to dismantle America's preeminence power. And it's amazing, America is only 5% of the world's GDP, but America is something like 60% of all public companies. And Larry Summers says that Europe's a museum. And it's so funny how he comments on how he looks at these things.
Oh, you there? Yeah.
Yeah, I'm here. Can you see me?
Yeah.
I got there's some disconnect took place. But so he calls Europe, interests me, a museum. America's still a dynamic economy, and China's a prison, and Japan is an old age home. And it shows up that we have the biggest GDP with basically the smallest population with the highest GDP as a nation per person. So we still have this muscle, but China is trying to dismantle that. And so a lot of thought believers believe in war games and playing chessboards, that they get behind Russia. And if Russia loses, then they'll come in and take all the land in Manchuria right up to the Bering Straits to across from Alaska. They need land. So they win. If Russia wins, then they just immediately take out Taiwan. And one of the biggest selling books right now are the chip wars. If 80% of the high-end chips of the world coming from Taiwan, and there is an invasion there, what will that do? How will that disrupt supply lines? How will that do with all the breakout in technology and the uses and requirements for it? So we see that China's been very clever of being behind the scenes with Russia. So Russia invades Ukraine. Immediately, America freezes $350 billion in assets. That fears a lot of rogue nations, because all oil trade goes through the U.S. And China's working on dismantling that right as we talk. It's in motion. And so they turn around, and they're now taking. One of the things that we did with Saudi Arabia is that they requested this, would you take our currency 5 years ago? And they said, no, you need more gold. So the Chinese have been increasing their gold. And then in December, they announced a huge increase as gold back in their currency, and they've gone to digital money. There's no paper money there. They've already had the closed economy. There's no Google there. There's no Yahoo there. There's none of these open society things that we have. And MasterCard and Visa. So if you want to go over, everything is done with like an iPhone, and you have to have a WeChat and a WePay, and everyone pays off their phone so they can track everything you're doing. And so you're seeing that they've already been, for me, and give you this other color, is blocking out great American corporations. And they also were threatened by Bitcoin. So they had to try to stop Bitcoin. And Bitcoin is a big bad boogeyman to centralist governments, communists or socialists. And so then they work with this Silk Road path over to Turkey. And it's interesting to see that they finally get a deal done with Saudi Arabia. And it accelerated when America pulled out of Afghanistan. And the Saudis, we just saw 3 weeks ago, that they brokered, that is China brokered a groupthink meeting for Iran and Saudi Arabia to become friendly again, to open up trade. America has not done anything of this nature. So now you're seeing China controlling a lot of the oil flow and protecting all along the Indian Ocean. They have a huge naval base in Sri Lanka. They are, moving up all through the South Asian countries. They're building islands in the Pacific for military. So this is, to me, is an important part of realizing they're out to create the BRICS currency. And the BRICS currency is now getting teeth to it. They created their own type of digital currency, and they're backing it with gold. And so now the Saudis are doing a deal with them. And I believe it was announced last week, is a multi-billion-dollar refinery. So China consumes 50% of all the world's oil. They buy the oil from the Saudis. The Saudis take their renminbi. Then they turn around and they contract Chinese companies and consultants and contractors to come in and build a big refinery. Guess what? That used to be American jobs. That used to be German jobs, British jobs, and it's not today. And so the recycling of petrodollars all through the US is getting diluted by the initiatives of China. And so that's where, when we look at some of the great thought leaders like Kissinger, who in the 70s brokered the deal between America and China, and that was a brilliant way of pushing back against Russia. So today, he's been saying this last year, that America should stop fighting China directly and confronting. They should have partnered with Russia to have a force to push back against China. But no, the cards have turned the opposite way. And so what did we see last year? It was gold starts taking off and central banks are buyers. Well, that's unusual, because when you have rates rising, then they turn around and they believe central banks, they can earn more money on short-term interest than gold, which doesn't pay any money. The Canadian government sold all their gold over 25 years ago. And that was just because they said they could earn a higher yield on their currency, and they're smarter at it. Well, isn't that strange? All of a sudden now gold is going up and interest rates are going up, and gold demand by central banks. So I do believe that we're seeing a structural change in the global geopolitics, and we'll see how it plays out. But it does set it up from a macro geopolitics of China, of really hurting the dollar, and some of the concerns that the dollar be dumped in the marketplace, and America will be in a serious position. They can't raise rates because the banking system is going to flop, and B, the dollar is getting crushed, so that means you're going to have embedded inflation for importing products. So that is the concern, and it's showing up in the gold market, and it's showing up in the silver market with the retail consumer, where there's a big premium on silver coins. And it doesn't matter if they're American or European silver coins. People that are smart, that understand history, are buying silver coins. So I guess that's a poor man's gold, but they're buying them.
Absolutely. Frank, I think you just covered the whole world economics sort of in 10 minutes here. Fantastic overview. Quite a bit to follow up on. So I want to try to follow up, because you mentioned so many points. I was trying to take notes. Let's start with a gold rally back in November, December last year, right? And like, I interview a lot of guests from the United States, from North America, and it seems the think, and you're one of the few that mentions more of the geopolitics that are happening worldwide. But the think is very Fed focused, right? Everybody's like 80%, 90% of my guests said, well, it was the Fed. Everybody thought the Fed would pivot. That's why gold was rallying, because that's good for gold. That didn't happen. So we tried to fight the Fed. We lost. It reminds me a bit of the song The Clash put out back in the 70s, late 70s. We fought the law, but the law won, right? And that's sort of what it reminded me of. Is that too simplistic? Or is the timing just coincidental? Because that was at the time when the Fed signaled a pivot.
I think that it's easy to it's easy to see a binomial model, and it makes it easier to realize, to have big moves, you need two forces. You need a big positive, big negative. And everyone in America and North America just focuses on the Fed. And I think behind the scenes, in international political scenes, there's another decision after America, and the concern is that America's policymakers, in particular all the government agencies, are overreaching in other nations, and freezing $350 billion of Russian assets was one of them, because that means to every other nation, their interpretation is that, well, if you don't like us, you're just going to freeze our assets. So, but we have to do all our trading US dollars, then we have to find an alternative to trading US dollars. And that really started to accelerate after the Ukraine invasion and the policies to go after the Russians and the oligarchs. It hasn't done much, it really hasn't. The dent has been just de minimis. Because China's there with economic trade, and the concern last week was Xi with Putin, and what's behind the scenes. And today I was reading in Foreign Policy. Now I don't know if it's just the hype and fear mongering, but there was a headline that Xi says he's getting ready for war. Well, what war is he talking about? They've been threatening this to invade Taiwan, or are they going into Ukraine? I don't know, but the fact that he says that will, if you look at history, it's interesting for me, is the great love trade. Socialists hate gold, it seems, but they realize that if there is a war or stress, no one will take their paper.
No,
So
absolutely.
one of the worst animals in the world was Hitler, and Hitler, in all of his invasions, first went to the central bank to try to get the gold. And Churchill was very clever and smart and saw this early enough, and he had moved all the gold to Canada. And then when America was making weapons for the British, they had to ship the gold down from Ottawa to across the border, and then they would turn around and put trucks and tanks into the Canadian border, and then it would come across back over to Europe. And the same thing as the Japanese. The Japanese were basically, the Americans had policy to contain Japan, and Japan needed oil because they had to import oil. So they invade China and they go for the gold because no one's going to take their yen. People will take the gold. So they need oil. The same thing Hitler realizes. They'll take their gold so he can get oil. And he went into Romania because Romania and that area had oil fields. And it's understanding sort of that you need energy, you need you have to have this oil and gas as a key component. And so these world governments make these decisions. So now we have, which is a big change, is Russia for the past 10 years has been accumulating gold. Never before, communists never kept it. But this idea of them continuously accumulating gold would just witness now, they're just preparing for some type of war or invasion, that they know gold is the only asset they can get trade with. And the same thing with the Chinese. And it was only when they got a certain percentage of gold behind their currency that the Saudis would cut a deal with them.
I think Russia bought 500,000 ounces last. So, or they
Pardon
bought
me?
it from Russia. Bought 500,000 ounces of gold last year. I think that was all from domestic production, but the central banks sort of soaked that up. It didn't leave the country.
And we saw this, probably about 10 years ago. China became the largest gold miner in the world, and they bought all the gold. It never went in the marketplace. And then after the '08 crisis, they used that crisis to basically move the bid price to the Shanghai market to buy the London market making for gold fixes. You're always twice a day, and that was always the primary place in the COMEX. And so for physical gold, they want to move that to Shanghai.
Well, they're super active in Africa as well. They're buying mines, they're building infrastructure. They're pretty much making those countries dependent on China as well, being it financially or otherwise as well, which is really, like, I don't know, I'd call it forward thinking to a degree, right?
Right. And
So
what they can witness, this is important. If you've been to China, and I've been there since the early '90s, going there with Robert Friedland, and going up to Mongolia and seeing these places. And each time you would go, I go to Toronto, I might see a new building. Vancouver, I'm going to see a new condo going up. And go to China and you see 50. And that's why the national bird of China was the crane, the construction crane. And so they realized Deng Xiaoping on this vision. He created tax-free zones, 7 of them. And they basically built these incredible ports for exports to be able to get foreign currency in. And he realized that America's greatness was this infrastructure and how much they put on infrastructure. So China has been incredible what they've been able to do on taking the best brains from North America and from Europe and then deploying it in their own country to build this incredible infrastructure. When I first went there in the 90s, I remember going for a run, and there's no cars except for there's on the highway system, the belt in Beijing was for cars, only government. So they had one way going in and going out to the Tiananmen Square. And after that, the highway was basically bicycles. The road was for bicycles. And I almost got hit by bicycles trying to run. And now there's no bicycles. It's only cars. And so they can show Africans, and they fly them over to China and they say, look what we've done. Let me show you a picture from 20 years ago and look what it is today. This is what we're going to do and transform your country. Well, what do you think these African leaders are going to, where do I sign up?
Pretty much. And then they sent the resources out back to China, right? Frank, like we talked about, like what is happening right now, but I'm wondering if there's a theory or an idea to sort of reverse the trend as well. What can the US do, for example, to stop the decay of the US dollar hegemony? Right? So the dollar's been going down, like it was a reserve currency pretty much worldwide for back 20, 30 years ago. 70% of all trade was done in US dollar. It was the currency bar none, right? Now we're down to 59%. Doesn't sound like a big difference, but it is. And the trend is downtrending, right?
Yes.
Do you see a scenario where this could be reversed? Like with all the debt, like I'm just like,
it's much more about fiscal policies. It's about trust. It's about showing some give and take and compassion, and that's what Kissinger tries to say. Like, okay, I'm going to give you Crimea, but you can't touch the rest, and you're going to partner with us to push back against the Chinese and some economic development. But the policymakers here attacked Russia. Trump was a Russian. All his money came from Russia, all these false allegations. And the same thing with Biden's son. It hasn't changed. You know, they call it the Beltway Party is very powerful. And someone has to come in, the policymakers, government is address this, because a lot of this overreaching and ideas, et cetera, come from the policymakers. And they have to think twice about, okay, we're going to confiscate all their assets. This group that's in now, they never thought about China all of a sudden partnering with Russia. And for China, it's a win-win.
Yeah. Just a thought popped into my head. Biden is close to 80 years old, I think. He's over 80, 81, 82. I might be wrong. But when I imagine Capitol Hill, I see a lot of old white guys, right? So all have been around, it seems, seemingly during the Cold War until it ended. And Biden obviously has been in politics for the last 45 years. So he's definitely been around during the Cold War. Is that still Cold War thinking that we're seeing, and people just can't get their head around a new age and like trying to figure out new ways to do business to a degree?
I wouldn't be so hard on old white guys. I'm an old white guy, so
you know what I mean.
Be tough. But no, I think it makes it too easy to try to blame that. If you go to the agencies themselves, it's very diverse. And so if you go to Washington, the whole culture for 20 years ago, even after 9/11, the impact of the Islamic look and dress and code and culture, it was never shut down there. It flourished. So I think that the policymakers have to rethink, and probably read history. Read the history of fiat money. Read the history of what happens if you destroy your fiat money, the value. You break that trust. What creates that? It's policies, systems, rule of law. But they believe that they can reach into other securities markets. They can reach into other banking markets. And there's this fine line of ruffling feathers. And we see the backlash in another way. How aggressively do the EU countries and the EU policymakers attack Google? How do they attack big American technology companies? And so it's recognizing they don't feel they can battle against the policymakers of the government at this stage in the U.S. But I can assure you, if they think the U.S. policy Beltway party is weak, the EU policymakers will be all over them. So they're indirectly attacking great American corporations.
Interesting. So we get sidetracked a little bit, but I appreciate you entertaining my thoughts here. I want to come back to just gold, and you talked about the new BRICS currency. I just want to talk about that correlation of gold and the BRICS new currency. Do you see that correlation? Do you think the new currency will be backed at least partially by gold to make it, as you said earlier, credible?
Yeah, I think that other nations are going to realize that if you want to be a global trading currency, you better own some gold. And I think that that's resonating with central banks. And if you're going to have really crazy policies like you've had in Turkey, that you better be buying gold. And gold has salvaged this currency several times, Erdogan. And it didn't in Lebanon. Lebanon didn't have gold, and Turkey does, and the currency inflation runs crazy in Turkey, but they have great engineers and great manufacturing, so they just keep exporting. Their business is booming internally. And I know for our global funds, we have Turkish investments, and we always hedge with a 20-day roll of the currency because they don't care about devaluing the currency to maintain exports. But it's interesting that his country doesn't implode because their rudder or their dagger board in a sailboat that balances fiscal monetary policy is gold. And that's what you need to have.
Absolutely. Frank, I would just want to come back to the here and now for a minute and see if you can answer this question. But I'm curious, you run three precious metals funds focused on miners, junior miners as well. What has anything changed in the last 4 weeks? Have you seen more inflows, outflows? Has the conversation changed?
No, it's modest. You know, there's modest. There's some speculation, and if you track the numbers, a lot of money this week went into the GLD. 5 billion went in 2 days ago, and a couple months ago, several billion went into the GLD. So that is a good precursor. But money flows into gold stocks, that hasn't happened, and that's where the big opportunities are. Because think of this, if the regulators can come in and shut down an alternative asset class, a decentralized asset class called Bitcoin, and destroy that value. And you go back in history, and I've noticed on Twitter more and more pictures of showing what happened in the 30s when the US confiscated all the gold in 1933. And so what would happen if they confiscate the gold and they get rid of Bitcoin? Does that allow them to still survive? Well, gold still went up, and that was the important part. What happened in the 30s, and gold went from $20 to $36, and Americans could not buy bullion. So only numismatic coins after a certain vintage. And so with that, what did they buy? Canadian gold stocks. And companies like Homestake went up 500%. Dome Mines went up, I think, 800%. And you had Campbell Red Lake. You had a big boom in the detour area of gold producers in Canada. So you had deflation in salaries and deflation in buying equipment, but you have your revenue going up 40%. So the margin expansion in gold mining was huge, and they're big dividends. And so money left banks to go into gold stocks. Well, what I find really interesting in my quant approach, I've tracked 100 gold producers around the world. And I can share with you, 10 years ago, you couldn't get 20 out of the 100 that had free cash flow yield. They just were mismanaging their balance sheet. They kept making acquisitions, which were, our top line grew, but on a per share basis, actually it fell. Our reserves grew, on a per share basis, they fell. Our cash flow went up. No, on a per share basis, it fell. And the gold stocks kept getting pounded. And the governance by the boards, et cetera, I guess, have woken up. And today, over 60% of the gold producers have a free cash flow yield. And that is a key factor when you look at New York stocks, the S&P 500, because a free cash flow yield means you have money to buy more equipment, expand your operations, increase salaries, buy technology, or buy back your stock, or increase your dividend. You need a free cash flow yield to do that. And so there's much more discipline on the Canadian and US gold miners. And I think that as gold starts to make its march up to 3,000, these gold stocks are going to be on a tear, and I don't think they're going to make silly acquisitions like they did before, where they dilute the upside.
Interesting point. And my last question as well, like, why haven't the miners run yet? Gold has been extremely volatile. I get that. Has the the recovery to close to $2,000 been too quick for investors to realize that the miners are still massively undervalued? Because GDX, GXJ are not back to April 2022 highs, for example.
Right. Well, there's still too many companies in the GDXJ. They've done transactions which are dilutive. Which you in the quant world, when you look at a company, you're looking at a per share value metric. So, did the reserves increase year over year on a per share basis? Did the revenue increase on a per share basis? And did the cash flow increase on a per share basis? And the first thing you can see this bifurcation in analysis is the quant world will look at gold was up 10% for the quarter. And any gold stock that did not have its revenue up 10% gets penalized, unless they can show a big increase in their cash flow. But if the top line doesn't grow, they don't perform as well as the company that went up 1% more or 5% more for the quarter in its top line growth. And so the same thing happens with reserves, and the same. So these metrics are you growing your revenue? Are you growing your cash flow? And are you growing the reserves? And if you can show that on a per share basis, those stocks do much better. If I just picked 10 factors, and you can't do a mutual fund, you need at least 21 factors. If I had 10 stocks only, and I used highest free cash flow yield each quarter, you beat every gold stock index, beat them all. You have a concentrated portfolio, and you just rebalance, and when you get a run like this, high free cash flow yield stocks make a tear. And I think the smartest allocators of capital have been the royalty companies. Even when they did an ATM at the market mechanism to raise capital, they were able to deploy it to get an immediate cash flow return on invested capital. It seemed that it got blended in, so there wasn't a dilution on that per share basis to the degree that you were seeing these other acquisitions. So I share with you that we had finally the juniors had went above their 50-day moving average. We do see fund flows move around the 50-day moving average. So when gold and gold stocks above the 50-day, you get trickling in. It's when the 50-day goes above the 200-day for both bullion and the gold stocks, then you start to really see fund flows on the upside. And so I think we could see gold go to 3,000. And I think with that, you're going to see these gold stocks triple and quadruple.
Fantastic. And on that bombshell, we're going to end the conversation. Fantastic. Frank, super insightful conversation. $3,000 gold, I'll take it. My gold mining portfolio, gold explorer portfolio definitely needs a bit of life. So love to see that. Fantastic. Frank, thank you so much for your time. Super insightful conversation. I think we covered a lot of ground and a lot to digest. My head is spinning a little bit. So I appreciate it. Thank you so much.
Oh, happy investing. Take care, my friend.
Everybody else, thank you so much for tuning in. This was Soar Financially. We were joined by the fantastic Frank Holmes. He's the CEO and CIO over at US Global Investors. If you have any comments, leave them down below, and to make sure to subscribe to this channel. I know roughly 85 to 90% of you are not subscribed for whatever reason. Help me explain it. I don't get it. We have great guests on. I think we'll get even better guests. No, sorry, wrong term. We have great guests like Frank Holmes on, and we'll bring him back. Just follow us, subscribe to the channel, hit the like button. We do appreciate it. Thank you so much. We'll be back with more.